Welcome to another episode of Not Investment Advice. We got the NIA boys in the place. We got Fiat Fan, aka Meme Master Flex himself, or ex-Fiat Fan. No longer. He's more in the crypto world than me nowadays. And
I've been converted, son.
Fully sailed. And then we've got our boy Jack Butcher, founder of Visualize Value. And I'm Bilal Zaidi. So boys, let's talk about what we're going to cover today straight off the bat. We've got this ENS token airdrop, which is basically the Web3 stimmy check. And we're going to talk about what that was, what ENS is, how it differs from what was there before DNS for the web, etc. Then we got some fun fact fan come in. We're going to talk about Elon Musk and why he's really selling his stock. There was a bit of controversy with that in the last week. And then if we get to it, we're going to talk about the genius of Costco and Jack's love for Costco. So let's talk about ENS, boys, because this is something I listened to a 2-hour podcast and Jack said, yeah, they were talking about too many technical things. It should just be summarized. So Jack,
okay, well, what does ENS mean?
Let's start with that.
From the very beginning.
What is ENS?
The acronym is Ethereum Name Service.
Okay.
I think the most basic explanation of it is like transferable native Ethereum domains. So if you're on Twitter, you've seen people with .eth as the suffix to their username, right? And what it makes possible is instead of you typing out that like 90 character Ethereum 0x1FB92XYZ, you can purchase an ENS domain and then tie it to an Ethereum address, and then you can essentially shorthand transfers. So if I wanted to send, an NFT to Bilal and he had Bilal.eth, instead of writing in or pasting that crazy ass address, I just put Bilal.eth, bang. You can make transfers, you can send money, whatever. I think that now works. You can host sites on your .eth as well. So I think Vitalik has that working now. So if you just do like Vitalik.eth / I think in a browser, it'll take you to a site. So I think really simply put, it's like the evolution of DNS, but it's like a crypto native domain and it makes additional things possible. And one other, I think, nuance to it is like they're tradable in the same way an NFT is on OpenSea. So when you buy it, it actually issues you an NFT and then you essentially just configure the NFT to have a relationship to an Ethereum address. So I think Budweiser bought beer.eth for
legends. Yeah,
someone bought it obviously firsthand. And then they sold it to them for 30 Ethereum on the secondary market. So it's like a way more fast and liquid domain market. Obviously, we know our boy Michael Saylor got me like obsessed with the idea of scarce digital real estate and domains. And this is like, almost a more extreme version of that, right? Because there's a liquid marketplace for these names. Is that a fair explanation?
Yeah, I think I was going to say that's a great explanation. I was just going to add on top of that, like the DNS, because forget the acronyms. I hate acronyms. DNS, forget what it even stands for. But when me and you or Trung go and buy fiatfan.com, right? Like you go to GoDaddy, Namecheap or whatever, and you go and you buy the domain. You check, they basically connect to a central database and they see if it's available. If it's available, you pay like $10 and you get it. If not, there are also secondary marketplaces like Cedo and others where you can go and like bid on these things as well. And a lot of people don't know this, but essentially, and again, I'm not that technical, but just from my understanding, like back in the day, like there was a domain name is essentially just a vanity URL for like a long string of numbers as well. But like there's like I don't know.
There's like an internet equivalent is what you're saying.
Points
like
you somewhere,
address.
Exactly. The address is like 192 what I don't know whatever it is dot whatever.
Oh, like the IP address or whatever, right?
Exactly.
Like, okay, I see what you're saying, man. Yeah.
And it's the same way an Ethereum address is like exactly what you described, that 90 character whatever long string that we're always fumbling around with our ledger, worried the money's gone into the ether. So it's a similar thing there, and you'll see, like you said, a lot of people on Twitter or on other places will say bzaidi.eth, which is mine, jackbutcher.eth, etc.
But this is being mediated by the Ethereum Foundation. Is like this is what gives it legitimacy. Is this correct?
I don't know if it's the Ethereum Foundation. I think they're independent of them, from my understanding.
But it's built on the Ethereum blockchain, I believe, and people have like converged on this as the like single issuer of these things. Because that's where my technical knowledge fails me, is like what makes them the like ultimate purveyor of this stuff. But they are,
right,
for whatever, you know, for all intents and purposes, they are.
See, but that is the question, right? It's like, what is giving them the authority here? So hold on a second. You guys keep talking. I want to find out.
Yeah, so I guess it's the same way. So Trung's going to do the research now while we're talking. But basically, from my understanding, like what you just said there, where Vitalik has got Vitalik.eth and it goes to a website, that was actually a part of the ENS development. On their roadmap was a DNS integration. So that was a part of that. So they said, we've got this one database essentially that runs on Ethereum blockchain, and there's this other database that runs, all the domains. We're going to do an integration for them to work together. And now going forward, they actually talked a little bit about their roadmap and some of the things they're going to be doing to keep like building on what they've already done. But the reason it was noteworthy in the last like week is they did this airdrop, right? So they basically launched the DAO, which we've talked about on the show before, a decentralized autonomous organization. And as they've launched the DAO, they issued these tokens basically, and they were very clear to say this isn't going to VCs or investors. This is going to 3 different parties. And from my memory, it was like the community, the DAO itself, which was like 50% of it, which is kind of everyone who's involved, including us who use it. Then 25% went to users like you and I, who registered that and are using it in their address. And then I think the other 25% were contributors, and that was everyone from like the core team to people who translated stuff for them back in the day. But why people listening to this should care is, first of all, only I think 35 to 50% of people have done their claim so far. So you can actually go, we can share it in the show notes, like the official tweet. There's a website where you can go, if you've got one of these .eth names, you go through to the site and you can claim these tokens. And when you sent this to us in a text message, and I was like, okay, this is going to be one of those things. It's like $200 worth, and I'm going to pay $100 in gas fees. But it was not. It was like $10,000 or plus for a lot of people.
So wait, hold on. You have $10,000 worth of ENS. What is the token called?
ENS.
ENS.
Okay,
token.
And does it trade on any of the exchanges or anything like that right now?
Yeah, it's on like the decentralized ones like Uniswap and
okay, so hold
Swap.
on a second. So you guys are just given these tokens 5 figures, like they're worth 5 figures, and presumably based on every other random asset that Jack Butcher / Jack Kramer has brought up on this show. So in 3 months, would you be shocked if this was worth $100,000? Not investment advice.
I wouldn't know.
No, yeah,
so hold on a second.
yeah.
Okay, hold on. Back it up. I actually think I remember you guys were buying these ENSs earlier in the show, right? Like episode 4, 5, or 6. Is this correct?
I don't know if we talked about it. We were buying the .btc.
Oh, okay. That's different. Yeah. All right. So,
I think I had one of these around the same time or just before that. Yeah.
Okay. So how much did you spend on .eth site or whatever whatever this thing is, ENS? How much have you spent?
I probably spent $1,000 all in, maybe.
For
like 10 years to register for 10 years. Yeah.
For 10 years, right? But like for me, I did it maybe for 5 years. I can't remember. And I just have one. I just have my own name.
Okay,
and
how much did you?
It's probably like $100 or $200. I'm not sure, like including gas fees.
You have 10 G's worth now of ENS.
It's actually worth more now because the price went up, right? And again, my personal opinion, and we talked about this, is like, let's back up a second. There's quite a lot we've already discussed. So like to answer your direct question, do I think it's going to be worth more? Yeah, long term, potentially it's going to be worth more. But also in the short term, I thought through the psychology, right? Like there's basically 100,000 people or a few 100,000 people that have registered these .eth names. A lot of them, $10,000 is a lot of money for anyone, right? But for a lot of people, that's like, game-changing money, right? So if you just airdrop 10 grand worth of tokens and you have the ability to sell them, I just assume that some of those people are going to sell it, right? Like in the short term.
Is it immediately liquid? You could sell it today if you wanted to.
You can technically, yeah. In the first day, it was quite hard to do it because obviously the liquidity of the market wasn't there yet, really, because it's a decentralized exchange. It's not like Coinbase, where Coinbase is like backing it themselves. This is someone needs to be on the other side of the trade. So, I can just share what I did. I sold a little bit of mine just to hedge my bets, and then I've kept a bunch of it. Well, I didn't sell it. I like changed it to ETH, right? So
fiat, but if that's equivalent of being fiat fan, man. That's fiat Bilal, just a non-believer.
No, that was like looking at the market. I'm like, okay, how many people are going to sell this? This might just crash tomorrow, and let me just at least make it worthwhile, do the responsible thing, essentially. Like, I don't mind holding ETH
You have
forever,
the house's money. You have the house's money.
Exactly. And then the rest, I'm going to hold on to it because I think it's quite cool. And the other thing to mention, this wasn't necessarily made for speculation. This is what they describe it as anyway. Obviously, anything in crypto is speculation. This is like a governance token, I think they said. Right. Though, again, my technical understanding of this is limited. By being issued these tokens or claiming these tokens, you're now a part of this, wider community. They describe it as a neutral protocol of the internet or an open public protocol, the same way TCP/IP is, or DNS and the other things that run the internet. And one of our favorites on the show, Chris Dixon, tweeted about this. He's basically saying, like, imagine DNS or any of these other protocols in the past, just open it up to have the users actually own a part of it, right? Or like at least get to participate in decision making. So there's another big part of this, which wasn't just about the airdrop. Like when you actually claim it, you have to go for all these like questions on like, not questions, you're basically, there's all these like terms and conditions, essentially, like they don't call it that. And then you basically say, I want these tokens to be, you choose a delegate or something. Do you know the phrase, Jack, when you went for it?
Yeah. You're delegating like your vote to
voting power to someone else.
Yeah. To somebody who's going to represent the protocol a certain way. And they all like put together pitches as to why they should be the person to represent X number of votes. And
in the real world, the equivalent is like these proxy services, right? Which, like, if you're a shareholder, they're going to hit you up. It's like, hey, listen, there's a vote coming up, and they kind of aggregate all the votes.
Exactly.
Okay, got it. I had one thought, since this is not necessarily directly related to ENS, since I don't own any, not investment advice. But you guys know the company VeriSign? It's like,
yeah.
This is one of the true monopolies on the internet and just in U.S. commerce. So I'm gonna rattle off some stats about VeriSign, which is insane. They're called the toll road of the internet because they have a monopoly over the .com registry. So we're talking about why or who has the ENS control. I wasn't able to find it out. Maybe we should go back and talk about it next episode. But or somebody who's way smarter than us can just
get someone
send
on
us a message. Yeah. And so think about how great of a business VeriSign is. So they have a monopoly control on the .com registry. So they control that. That's 140 million people have .coms, and they pay $8 a year. Just insane. I mean, dude, you guys all own websites, right? What happens when that thing comes up? You're like, yeah, I'm gonna pay, right? Man, just like it's automatic, right?
Auto renew, yeah, it hits you, yeah.
Dude, so they make a $1 a year, and they have a 60% profit margin. That's the top in the S&P 500. It's literally on cruise control, right? But of course, it's not a bulletproof company, and they've actually, their stock isn't that crazy because people have already baked in all these kind of monopoly features. But like, if you go in the risk factors of the company, is like basically they lose a monopoly, right? That's the number one risk factors right there in their kind of like annual report, and even for their IPO perspective, they're just like, well, the organization that gives up a monopoly, which is the ICANN, which is the whatever international and whatever the naming service, they're like, yeah, we can just take away your right to do that, right? But it's insane. So the last thing is, they do $1.4 million per employee at the company, which is just absolutely outrageous.
That's mad.
Just for an example, I think that's on par with Netflix, which is number one. like 1.7, but it's just insane, right? I think Google was doing like $1 million an employee. So these guys are doing more per employee. And that's why I was so interested in who's like kind of giving away these powers, because man, it's just the right money printing machine.
Yeah, but the cool thing is this money is now going in this treasury. And I heard them say there's like 48 or $50 million worth of money in this treasury, right? Like, because over the years, all the people that have been registering these .eth domains and whatever else they're doing, it goes in there, there's all these fees. And now that is where this money is being distributed from, right? It's kind of a really, honestly, it's quite hard for me to wrap my head around, because it's a new form of organization, right? Like, it's not like an LLC and like a company where you see their accounts and like their objective is to maximize profits. In this case, their supposed objective is to maximize like the infrastructure, like the usefulness of the infrastructure, which is quite cool. And like listening to the people who were behind it, I was like, okay, they seem legit people, but you know, I don't know the nuts and bolts of it. But yeah, Jack, what about you, man? Did you have any other thoughts on it? Like how it was all rolled out?
I was executed incredibly well. I think like in terms of like UI of a like crypto launch, it's up there. And like it really is like a utility layer of Ethereum, which is, you know, I think if you believe in Ethereum as an asset, then this is this is kind of a no-brainer companion to the growth of that network. And the thing that makes it like really unwieldy for most people, this is like a workaround, because the like thinking about remembering those addresses, storing those addresses, it's like this so intimidating. So even like one of the things that they're doing, or one of the things that they're making possible, is if you're building an app on Ethereum and somebody has an ENS name attached to their account, you can then display that as their username, which is such a basic feature. But I think one of the like massive security risks is like, you know, when you're confirming a transaction on your ledger, you're like, you look at the first 5 digits of the address and then the last 5 digits, and you kind of hope that the middle is correct.
Yeah.
And obviously the odds are with you that it's going to be the case. But if you were going to...
that's a scary moment every time.
Yeah, if you're going to do anything untoward, that would be the perfect way to like hide it, right? It's like, I don't even know how possible that is, of like finding an address that isn't yours, but it just differs in the middle. But this is like, you know, when you see bzaidi.eth, you know that's you. So I think...
Yeah, and you can take it with you as well, because it's like one source of truth. That's kind of what I heard them talk about too. It's not like, I've got bzaidi on Twitter, but I've got bzaidi212 on Instagram because it wasn't available. It's like, this is one layer for everyone.
Yeah, which doesn't feel that significant, but it is, I think. Like, it is a really significant, different way to interact with the internet. And that's like, before you even get into this idea of like sign in with Ethereum and like wallet as your connection, where you own data and you're like giving permission, versus you're storing your shit on 250 databases, and then every other day some like shit IT breach is happening and your password is on the dark web from, you know, Equifax or wherever else. So it's like I think people who really see the future as, you know, log in with Web3 or log in with Ethereum, this is like a turbo boost on the usability of that idea.
Yeah, definitely.
And it feels like, I don't even think anybody's competing with them unless you're talking about different chains or different currencies. I think there's Unstoppable Domains is one.
Brutal, awful name, man. ENS is winning. I'm putting the Jack frame on this. Unstoppable Domains, ENS. Whoa, which one are you gonna do?
Yeah, I think it feels like an infrastructure layer, and people trust it for that reason too. And you know, the team has given people a reason to trust it, and the network effect of it. You know, it kind of has this signal of support of the network too, which is just an interesting thing, right? Where like a .com, you wouldn't think like, oh, those guys are like really into X because of .com. It's like the .eth is a signal on top of the functionality too, and you see it like proliferating across Twitter.
And I think the one thing to add, Jack, is that Coinbase were also announced that they're
They're
one
going
of
to be
the
in the
main,
delegate process, right?
Exactly, they're in the delegate process, and I think they were one of the top 3 voted delegates when I last looked. So, which is quite an interesting thing. I would prefer to give it to some individual who's really in the weeds with it. But if Coinbase is involved, I don't think that's a terrible thing. It just kind of legitimizes it, and obviously they can help with infrastructure.
Well, there you go.
Well.
When I was asking you guys, what's the source of authority? Obviously, it's not from Coinbase, but to have Coinbase be involved in this level clearly is a sign of something or an imprimatur.
Yeah. And I don't know. I don't know the technical aspects of this, but it doesn't just route funds Ethereum to Ethereum either. It lets you receive funds on all different chains, all different currencies. I don't know the technical aspect of that, but
I think I heard them say even Bitcoin and stuff.
Yeah. So Coinbase being behind that, and Coinbase launching web wallets and NFT exchanges and whatever else. It's the people that are building the network effects of Web3, if they are backing this format, then that's how it's going to proliferate and continue to live. One last thing I will say is this is not my idea. I read it somewhere, but all these Decentralands and metaverses that are constrained in size. So they're there's only this many plots in Decentraland or this many plots in, I don't know why, but none of the others are coming to mind at the moment, but they're essentially constrained digital real estate. This is constrained digital real estate, but in a different way. So you can create and name entities in the metaverse, but you're not buying a plot of land somewhere, right? It's this is a thing that represents a destination that is unique, but it's not finite in supply, which I think is as a tool or as a model for expanding how the metaverse, whatever that might be, interacts. If you have a standard like this that helps things talk to each other and helps people think about it in the same way that familiarizing people with the internet, you would say go to this.com, right? Or pets.com, amazon.com, versus there isn't that shortcut, or hasn't been until now, to interact with crypto properties or people and this is the consumer layer. So it's pretty exciting.
Yeah.
There's just to sum from me, who's literally a total noob on everything you guys talked about. What stood out for me and what I think is very helpful and maybe is Lindy in the long run for ENS is like you said, Jack mentioned, the ease of use now, right? It's instead of all these, how many numbers or letters was it before?
I think it's 32.
Yeah, so 32
I said 90, but
compressed down to whatever. You're an easily rememberable kind of .eth domain, equivalent of a domain. That the other part of it, I didn't realize that it's such a good point when you brought up Zaidi.eth is the security aspect of it, right? It seems much more secure just from a broken human brain standpoint. Our brains are they're just great in a lot of ways, but weak in a lot. And this seems to solve one of those problems. The Coinbase sign off seems super kind of, I know we don't, the whole point is you're not trying to give away the authority, but that seems to matter. And then the other one, one you guys mentioned at the top, Vitalik.eth, right? I mean, the Godfather has one of these addresses and that gives it kind of what else are you going to do, right? You're not going to trust the dude. Right. So I think those things kind of jump out at me.
I just want to correct this on the record. They're 42 characters long. Addresses. I know somebody's sitting there seething right now. So
they're already in the comments, man. They're
they're already in the comments. All right,
I think I said perfect. 90 after you said it as well. But yeah, and then the only thing I was going to add is I completely agree with you. I think all of these are, we did that big episode on Web3 inflection points. These are all the little things that help take something from raw code for a bunch of nerds like us to your mum is using it without realizing because her tax deed or property deed is on the blockchain and they're using DNS in the background without you even realizing, right? Because you're just seeing an interface. And that was one of the things I listened to kind of their roadmap and not, to bore you with the whole thing. But the summary is they're going to be building a lot more stuff like layer 2 versions of this, right? So, right now it costs quite a lot of money to register one of these things for a regular person. Even $100-$200 is quite a lot, right? Like a domain name costs $10. So the reason it costs a lot is because the gas fees are high at the moment. So they're gonna build, layer 2 integrations with whatever that might be, Arbitrum, Polygon, I don't know. So that's one thing. And then the other thing that I thought was interesting was subdomains. And that is basically, on the web, you have visualizevalue.com, but you also have shop.visualizevalue.com, which is subdomain. And long story short, that is going to be how my mum has her property deed in like this bigger thing. So I think it's really interesting. I definitely long term I'm really bullish on it, but just strictly speaking, with not investment advice personally, the reason I flipped some of it to ETH was just because one part of any investment is the fundamentals and the other part is valuation, right? So I have no idea about the valuation. Is this a fair valuation or not? I don't know what to base that off of. So I'm like, okay, I've got a bunch of free money essentially. Let me like take a little bit off the table. But yeah, if you do own one of those 100%, you should go and claim that. You've got until I think May 2022. But I think a lot of it has already been distributed. So I would definitely like check it out and claim that if you can.
I just want to correct Bilal there. He said that he took some off the table. No, he paper handed it. Yeah. But anyways.
Noodle hands.
Yeah. What's next, boys?
So I think we were going to talk about Elon Musk, right? So yeah, anything else on that really quickly before we finish off, Jack?
I think you brought something up that was great and like maybe a good encapsulation of it is like in the early days of the internet, people using it in universities, and you're basically typing command line to find stuff. It's like type the IP or whatever it was going in the browser to pull up a resource. And you can't even imagine people navigating the internet with that now. So it's like Ethereum, the world computer, this is the shorthand that starts to make it easier to access things and just think about it in a more human and consumer esque way. So I think it was a good chat.
Definitely. Yeah, definitely. And the other stuff is like, the wallets need to be more user friendly and stuff. I know there's lots of people working on that. So yeah, all right. Definitely really cool. And congrats to everyone who's got one of those. You got rewarded for being an early adopter of this. And it was definitely kind of a cool thing. I think we're going to remember that. So Trung, this is Fun Fact Fan time. Let's talk about Elon Musk, man, because this has been blowing up the internet for the last few weeks. He's been doing a bunch of crazy stuff with his Twitter poll. Well, why don't you just lay out for us like what's going on with Elon Musk? He talked about selling some Tesla stock. Over to you.
Okay. Thank you, Bilal. That's the perfect prompt. But there's pieces of the puzzle as there always are. So the first piece Bilal talked about was, and what made this mainstream and media was that last week Elon put a Twitter poll out, and he just said, he referenced the unrealized capital gains controversy and said, based on the unrealized capital gains controversy, I'm going to put up a Twitter poll and I'll sell 10% of my Tesla stock. It's binding if the Twitter poll happens, right?
Which would be how much, Trung?
He owns, I got the number here. He owns 220 million shares of Tesla, which is about 200, we'll call it $220 billion, right? So he's like, I'll sell 10% of that and put it up on the poll. And we can actually do the screen share on his poll here. And we might as well do the screen share because, this was get the counter. Trung T Fan got the old Elon impromptu. Hold on, where's this thing?
Yeah.
He bounced on me. I can't even do the screen share. Doesn't matter. Okay, so he did that. So he says I'll sell roughly 10% of my 220 million shares. Okay, so that caused the brouhaha. People were like, okay, the vote happened. 58% voted yes. So I don't know how legally blinding Twitter is, but based on that poll, he's supposed to sell 10% of his shares, right? But this is where it gets tricky. So the shares, the real reason that he's actually selling, so that was the presumed reason on the internet and in Twitter that caused a controversy. The real reason, and he actually talked about this publicly in September at the Code Conference. He sat on stage with Kara Swisher and he said, I have about 20 million shares of Tesla options that are coming due at the end. They actually expire at the end in the next summer, and they were issued in 2012. The issue price was $6. So Tesla is now like $1,100, right? So the nature of those options is you don't get long-term capital gains tax on that because that was not an option that was exercised 10 years ago, right? He's exercising those options now towards the end of the term. So that gets treated as ordinary income. So the tax on that is literally it's going to be 40 to 50%, right? So this all was going to happen. He talked about it publicly and he said, I'm going to have to sell a lot of I'm going to have to exercise these options and pay a massive tax bill. And there's two reasons why he wants to do it this year. One reason is it's almost certain that taxes will go up next year. The drumbeat is so high right now from government to raise taxes. So he's like, even though the options they expire next year, he's like, let's just get it in this year so I can pay lower taxes. That's part of it, right? And people will be like, oh, tax avoidance. It's like, who here doesn't want to lower their tax bill, right? Like, and the amount here is very material, right? We're talking billions of dollars. So he ran the poll, but the reality is this. He knew he was going to sell, but there's a little nuance here. So before that Code Conference, that was late September, he actually initiated an automatic selling exercise and sale of his Tesla stock. He did this in the middle of September. So this is what actually people are getting really pissed about because forms just came out and it's showing that in mid-September, he knew he was going to sell in November. And they're like, oh my God, this Twitter poll is such a farce, right? But there's two parts of this. That is one take. I can see that. That take does seem valid. And am I a little bit biased? I'm a little bit biased. A little bit on the Elon camp. So there's two parts of it. The first part is Elon, obviously, as we talked about, is just a freaking PR genius, right? So when you guys saw that poll, what was your first instinct? What was your first instinct? Is this like, this has to be some type of ploy? Or was it like, oh, this guy's just totally off his rocker?
No, I just think like he knows the outcome. That was the first thing. He knows that the poll's going to come out as yes.
Yeah.
So he must have a reason for asking. That's all I thought.
Yeah. Okay, that was what about you,
I thought the same. Yeah, I thought like he's not doing this just for jokes. Like he's probably obviously having fun with it as well, but I feel like he's already decided.
Right.
And this will give him the easy yes to be like, oh, well, I asked the internet and they said yes. And if they said no, he would be like, oh, sorry, I had to do it anyway. I already filed for this or whatever. So either way, he's got like a win-win.
It, right? So like that's the other part of it is like, well, the other thing about his pre-filing is you can cancel that. That's not set in stone, right? Like the thing he did in September. So technically, if the Twitter poll had said no, he actually could have canceled. That's an alternative universe. We do not know. So there is that 10D chess part of it, right? People, the Elon haters will be like, oh, look at all of Elon's backers. They're going to think this is a genius PR move. But I mean, like, I'm sorry, it is a genius PR move. It's all anybody talked about for that first day was like, oh, Elon's taking the mantle of, I'm going to pay this unrealized capital gains tax thing, right? He's like, I'm going to get ahead of it. So even though you, me, and Jack are sitting here talking about the real reasons behind it, what percentage of the world and investors and people that actually understand what's going on are teasing through and looking at the layers of the onion, right? So he framed the story exactly how he wanted it framed. But here's the other part of it. There's a hilarious. So if he had just set this thing and automatic, which he did in September, it was going to happen no matter what, right? And he could have stopped it, but let's just assume it was just going to happen. If he had done nothing, if he hadn't put that Twitter poll up, it wouldn't have caused this uproar, which actually ultimately led to a sell-off on the Monday and the Tuesday. So here's a funny part. He costed himself like $50 million. Like if he had just sold on schedule, like automatic, and then on Tuesday, CNBC reported, oh, Elon sold his shares, but this was decided in forms 2 months ago.
The dump would have happened after, right? Like,
Yeah. So he he literally costed himself $50 million for like a Twitter joke. But then, so there's those parts of it. And obviously 50 million is not the material to him. The other part, which is actually people are deciding how sketchy it is, but his brother, board member, also Kimball Musk, he sold about $100 million worth of Tesla shares. And did he do
that before the poll?
Yeah, I did it before the poll. So the uproar is like, the optics of that are awful, by the way, right? They look terrible. It's like, if you're going to run the poll, it's going to tank the stock, right? But what's funny is that Elon costed himself money on the pre-schedule thing. But then his brother's like, dude, you're out of your rocker. I'm selling my shares before you do this, right? And he has so much. I think he sold 20% of his stake. So, I mean, Kimball's a billionaire just from Tesla stock, right? I mean, that's the other thing that's not great. And I'll be straight. I was like, man, it's like nepotism, right? It's like your brother's on the board.
That seems a little off, right? Is that not going to get him in trouble? Or
well, this is what people are debating is that insider trading? Is that material non-public? Because they're actually asking this is legally, can you act because the poll wasn't done yet, right? Elon is like, it's actually very tricky what they're going to try to prove. What Elon told you on Thursday, hey, I'm thinking about doing a Twitter poll on Saturday. Is that insider trading? Like that's the question that's being asked now, right?
And actually, Trunk, so while you're saying that, I've actually got the SEC thing up here right now. I'm just going to share my screen. So this is, can you guys see that? SEC Form 4. You can see the dates here. Musk, Elon, I don't know. The post said something about September the 14th or something. But it says here, date of earliest transaction, 11/08. I don't know if I'm misunderstanding what this is, but was that something that was filed way before in September? It's
called the Rule 10b-5-1. This is so guys like Zuckerberg, Bezos, executives can just put share sales on a schedule because they'll always have material non-public information, right? They'll always know what's going on. So if every time they sold, people had to decide, hey, what was the real motive behind selling? That's going to cause a lot of legal problems. However, if you just set this Rule 10b-5-1, you file it, right? Exactly. That's what Zuck does. It's that's what Bezos does too. It's I want you to sell $1 billion worth of Amazon shares every month. It doesn't matter what news is happening. I'm already signing this, right? So it protects them legally. So Elon did that in September. And again, just to summarize, Elon had choreographed on stage, and it was spread to millions of people that he was going to sell sometime later in the year because he had options that were going to expire, right? This is not news that he was going to do this. What is now being asked though is will he abide by that? Is he going to sell 10% of Tesla now? And because
what's he done so far?
He sold about
$1 billion or
$5 billion total. So this is also the other part of it. $1 billion is from the options exercise, which is what he talked about, which kind of compelled him to do this, but also sold $4 billion separately from just his from his stash, the existing stash he has. So people are trying to tease out okay, how much of this is from because you had to do it, and how much of it is him maybe honoring this Twitter poll. So there's this whole back and forth going on. But my guess of what's going to happen is that from here to the end of the year, he's going to sell about 24 billion worth of Tesla stock. He's going to have to pay half of that in taxes. And the poll is just going to, everything else, people can forget about it and move it away. The real question, the truly sketchy thing is that Kimball Musk.
Yeah, that seems a little off to me.
I guess for them is I actually don't think they can get legally pinged on that because it wasn't corporate insider information. And
it's not like he knew that the numbers weren't going to hit for the earnings.
Yeah, exactly, right? And Elon's already has just so twisted the best practices of Twitter, right? What is even right or wrong, in terms of the SEC now, right? It's are they going to be hey, you can't tell your brother that you're going to do a Twitter poll? Is that literally in the purview of the SEC? No, I'm serious, right? So I think these are the questions that are being brought, and that's kind of the overview, though. The reason why he did it versus the Twitter poll hype, and then why people are really upset. So the real reason this was instigated is he had options to exercise about $20 billion worth that he wants to do between now and presumably the end of the year, so he doesn't get whacked by next year's tax raise. the Twitter poll, which people are now saying was a total sham, but we'll see whether or not he ends up selling 10%, because 10% will be more than the options exercise necessary. And then his brother, which admittedly does not look great.
Yeah. So do you think, and I don't know a lot about this, but has he sold significant amounts before?
No, he does the move that we talked about. He borrows against it. I mean, like, yeah. It's
so what do you think's different this time, apart from the options part where it was going to expire? What do you think? I honestly think that.
I think the fact that he had to sell just to meet this tax obligation, because the thing
might as well just do it in one swoop. Right? Yeah.
Well, the other option was to not exercise the options, but then he'd be leaving about 10 billion on the table. Again, that's his right to do, and that's a fraction of his net worth,
ridiculous.
Right?
Yeah,
that would be ridiculous. So he's going to exercise 24 billion worth, but he's going to have to pay half of it. And people are saying, "Oh, you could have just borrowed against your thing to like pay down the taxes." I'm like, man, dude, you don't want to like just pay down with the options exercise, right? And so that was the reason, in my opinion.
Jack, what do you reckon, mate? Anything? What do you think he's up to?
I was going to ask the same question you just did, Bilal, and then like my other question is like, what's he going to spend it on? Doesn't he live in a little steel box in
Dogecoin, mate? Definitely.
Yeah. There was some speculation that there's some like new.
Oh, actually, dude, to answer Jack's question, I think he bought some more Tesla stock. Like he's net up right now in Tesla stock after everything.
Well, now that's getting spicy, isn't it?
Yeah,
well, I mean, the thing he says, right? It's like he said it a number of times. Like, I'm first in, I'm last out, and like you can't really deny that this is what the guy does, right? Like he really is all in on his and like he's all in. And my guess is he's going to end up buying more of Tesla stock. To be honest, like
I just imagine he doesn't have like I just don't imagine him like having a American Express and be like, oh, let's go down to Rodeo Drive and buy some gear. He ain't doing that. He ain't buying cars or anything. He just lives on the base, doesn't he?
He lives on the base. And I mean, we don't know how, the dude's working 20 hours a day, right? Like that's just the reality. I've been sitting on this video GIF / meme.
One second. Let me share it first. 1 second. Can you see that?
All right. It's so much funnier when I go. All right. So I've been sitting on this video for age. Actually, Bilal, click back. Can you hit back on that? So we get the Elon reply there. Yeah.
Oh,
dude,
there we go.
I typed when the poll hit. I pulled up this video, and for the listeners, it's a dude with 3 smartphones in front of his face, and the original purpose of the video was him like swiping right on like girls on Tinder, but it just looks like him swiping fiercely on 3 phones. I just wrote Janet Yellen using all her burners to vote yes on Elon Musk should I sell 10% of Tesla poll. I actually had a feeling. Listen, it was just of the moment. It took over that day, and like sure enough, like 30 minutes later, Elon gives a double crying eye faces on it, and I'm like, oh man.
I mean, by this point, it's not even a new thing, man. You two. Dude, I'm surprised you didn't get him to come on the pod for this to get his opinion.
I want to speak into existence. There's a non-zero chance. I mean, you guys tell me what you believe. I
100%.
think, dude, he ain't going on. He ain't trying to go to traditional media, man. He wants to go to the pirate ships.
Yes, we're definitely that.
All right, so that's
anything else on Elon, man? I think it's really interesting. I think the only question I had probably for you, Trung, is, like zooming outside of Elon Musk, when CEOs sell stock, like that's always a noteworthy thing. It doesn't always mean it's a bad thing, right? Like they're, humans like anyone else, they want to sell and diversify. Like a lot of these guys, and 98% of their net worth is in one company. And so like, I'm curious, like, have there been any other high profile cases where, like, how does this compare to other cases where CEOs of that stature are selling stuff? Is this that unique, or is it doing what most people do?
It happens it definitely happens a lot. Like Zuckerberg's on a schedule, Reed Hastings on a schedule, Bezos is on a schedule. The last one at this level is probably when Bezos started selling in 2017, $1 billion of Amazon a year just to fund Blue Origin. I think that level. And also Adam Aaron, the CEO of AMC, announced this week he's selling AMC stock. There's a bit of uproar, but he's like, guys, I told you this a long time ago. And his whole point is like, Bilal, to your point, is like, I gotta diversify also, right? It's like I'm also a dude. It's like I don't think I've seen
GameStop.
Yeah, he's gonna buy some GameStop. I don't think I've seen I don't think I've ever seen anything of this uproar, right? It's just because the level's just next. It's just
yeah.
Next
This
level.
is the richest guy in the world.
Actually, the other one that was off the top of my head was when Travis Kalanick totally went out of Uber. So when they kicked him out, but he was still the largest shareholder, and he's like, "F you guys, sell it all down and go all in on his next thing." Like that was the one where I remember, I'm like, "Oh, that's like
He's
respect."
going ham.
That's a killer move, man. Yeah,
definitely. No, it's interesting, man. I think it will be interesting to see like next year, like the first 6 months. Like I wonder if there was something. Let's just play the scenario out. Like say there was something with Tesla, like they've been on this crazy tear, obviously for several years, and say there was something significant that was wrong or didn't work out, and they got hit beyond just this part. Because obviously, people are seeing this as a negative signal, or like the price went down a little bit because of this. In the short term, I don't know what the price is today. But it'll be interesting to see like if they missed their numbers for like shipping whatever next car or the trucks or whatever. I don't follow it that closely. Will people be like, oh, this guy knew and he's like, diversifying while
if there was like a massive like manufacturing time bomb basically that he knew about over time. But even then, man, like, yeah, I to your point, that would be the one where like, okay, this is bad, but like, dude, does this guy strike you as the type of guy that's like when he sees a manufacturing time bomb, his way to deal with it is to sell 10% of his Tesla holding? It's like, that's not what this guy, that's not what he's about, man. He's going to go down with the ship.
Yeah, 100%. Actually, and last question on Tesla for you two is like, obviously Tesla's done really well for the last, 7-8 years or however long it's been running for. I'm curious on your take on Tesla stock. Obviously not investment advice, but just like I sent you guys a screenshot. I'm in this investing group on WhatsApp, like with a few random friends. I actually don't know most of these people, but like one guy was like, how do I short Tesla stock? And then he was also asking how to buy gold. So I was like, okay, this guy is my sort of guy.
And he's also like, hey, listen, I was just on Alex Jones's website. They sold out of the end of the world kits. Do you guys know any manufacturers?
Exactly. No, but I'm just curious, like, do you think their valuation has been justified / do you think it's gonna?
I think we have to come back to this next episode.
Okay.
I'll tell you why. Chris Bloomstrand, who is a hedge fund manager, had an insane thread breaking down Tesla's valuation and comparing it to Amazon and Google, and basically saying, okay, so when Google was at $1.3 trillion or when Amazon was at $1 trillion, this is how much money they were making, right? This is how fast they're growing. This is their profitability. And it's just like, when you frame it like that, man, it does not look, it looks like Tesla's valuation is very full right now, and they're going to have to execute insanely well to justify it.
And it's different between like selling physical, and I know they're doing a lot more than just physical cars, and they're going to be doing a lot of other stuff in the future.
Well, that's the dream, right? That's
compared to Google search, which is 98%
the greatest money machine ever.
Apart from like paying Apple some money for their search engine stuff on their phone. Jack, you got a thought there, mate? What are you thinking?
Nothing I can say quickly. I think the idea of like the interoperability of the networks that they're building, like the power network, and like, I don't know if this would be like plug and play with a Starlink and all of the like next gen like partner companies. That feels like what you're hanging like a massive valuation on, which is all
the amount of execution
hopefully going to come together. But it's crazy, the amount that has to come off for that. But also it is like, like no company I've seen in my lifetime, just in terms of like from a standing start in your lifetime, turning into like a household name and building cars in America. It's crazy.
In an industry that like is not easy to just break into, right? It's not like, hey, here's an app and a billion people downloaded it. This is, like not just Tesla, but SpaceX, even more so.
Yes, Starlink is another one. It's like
all of them.
Literally two of the hardest industries other than like oil and gas, right? It's like, what else like atoms with their hands that you have to manipulate the physical world with? And this is like, but the people say like, oh my God, he's just such a charlatan. And like, he's just, all he is a salesman. Like, dude, guys, do you have any idea how difficult, like technically difficult he's trying to accomplish is and how far it's gone? This isn't to say it's a done deal, like Jack said, right? Like what you're paying for is just insane vision. But like the idea that he hasn't accomplished and his team and everybody he's worked with hasn't accomplished so much at this point, it's outrageous, man. Dude, they fucking landed a rocket that went to space on like a 10 by 10 pad in the middle of the ocean, right? Like, this is not child's play.
Yeah, 100%.
Yeah, it's just like I think it's just a different beast. It's like people are valuing it differently because it's like a totally different animal. Like, they're not talking in quarters or years, really. So, yeah.
All right.
Crazy. It's a pleasure to watch it, though.
Yeah, incredible. Yeah, and also seeing it play live on Twitter is pretty fun as well. So, all right, boys, let's move on to the last topic. We've got the genius of Costco. Before we go into the genius of Costco and their business model and how it's a crazy business, we must bring up that Jack Butcher is a massive fan of Costco. So when Jack and I first did our first interview a long time ago on Creator Lab, we texted a few times, and I don't know how it came up, but like you sent a picture from Costco, and I'm like, what is this? And it was maybe because you're buying like a bunch of steaks or something, I don't know. But I just realized back then, I was like, oh, this guy loves Costco. And I don't know if it's like a joke or...
No, it's not a joke. It's very serious.
You love a franchise, as you said.
I love
Dude,
Costco,
Jack,
man.
please walk us through why you love Costco so much.
What do you love about Costco?
And how much does Celia share this affinity that you have for Costco?
I'd say if I'm a 10, she's probably a 7 or an 8.
Okay.
I'll confirm it next week, but I'm pretty sure she lags it by 20% or so. We lived in New York for 10 years, and then when we moved to Nashville for a year, was like Mecca, man. Like, Bilal, you know what it's like getting food in New York. Like, you get on the subway, you go to the shop, you get 3 or 4 shopping bags, down the stairs, up the stairs. It's raining. The paper bag collapses and smashes on the floor. You get
Have you been to Trader Joe's in New York? Trader Joe's. Yeah. You literally walk in. Trung, have they got Trader Joe's in Canada as well?
No, I also did a big thing about them, but they have one. I lived in Boston. I went to Trader Joe's all the time.
So Trader Joe's, obviously, like for New York, is really popular because it's actually well priced for New York. But you walk in the door, no joke, there's already a line as you walk in. It wraps around the store. It's crazy.
There's someone with a flag, showing you where to get on the line. That's
like a dinner, like a traffic warden.
Or like the tour. Have you ever seen those tour groups, like the Chinese tour groups?
Exactly,
40.
So back to Costco. So you just loved, it was a contrast from what you live in. Oh my God,
here. Complete contrast. Yeah. So it was like Costco is sort of fantasized in the UK, man. I think they even got Costco's in the UK.
Oh, they have.
Now,
I used to go as a kid. Yeah, Edmonton or Enfield or something.
I never went when I lived there, but
get like 72 croissants.
Yes. So this house we moved into in Nashville had a barbecue on the roof. So I was like, I gotta go get some meat. So I went down to Costco, and it's like,
bro, the meat section at Costco is just, it's unreal, man. It's unfast. Here's the thing, dude. If you want to buy from Costco, you have to have a second fridge and a second freezer. So my wife and I do not. So like, we stopped going to Costco because every time we came back, there's just nowhere to put the food. It's just like, you get, like you said, you hit the meat section, but then you go to the frozen food section. Oh my goodness, the frozen food section, dude.
Yeah, I'm not really sure. Yeah, I'm not sure how they do it. It's like,
but we're about to find out in a second. Great segue.
I go in there for, like I said, having a barbecue. I'll go in there. I'll get a couple pieces of steak and some, some shrimp or something. I come out with $900 worth of stuff. A vacuum cleaner, pens, some like device that no one's ever seen before. Electric toothbrushes. Just walking around, I can't resist it. It's just unreal. And you can't use a credit card in there either, can you? It's all.
They had a relationship with Visa or MasterCard that they stopped. They had a relationship with one of the big credit card vendors, and they cut it, and because of the fee. And it was a really big news, actually, because I think whatever that relationship was like a very material percentage of this credit card company's revenue, right? Which makes sense.
you still have that buying habit without the like convenience of a credit card, which is crazy.
That's mad.
Anyway, unload on us, Trung. How do they do it?
So Trung, we just explained the individual love for Costco, but like from a business point of view, I remember reading a little bit about this as well. Just like break it down, man. What's so special about this?
Okay. So Costco is the world's third largest retailer behind Amazon and Walmart. It does 190 billion a year. And most people are probably familiar with their business model. They have these giant warehouses, mostly in suburban areas, because that's where or not suburban, even just outside of the cities. That's where you get the space, right? So this is the genius of their business model. So for the people that are Costco members, you'll know this already. For the people that aren't,
executive members.
Executive. I'm Gold Star. I'm Gold Star. So the Costco business model, they sell everything at basically cost. Their maximum allowed markup is 15%. That's the maximum. And very few of their items ever hit that point. So I'm going to walk through the genius of it. Jack touched on it with the executive member card. The absolute genius part of the business model is just getting people to be members. And here's the insane stat. They did 190 billion in revenue, okay? And 2% of that revenue was in membership fees, $4 billion. But here's where it gets crazy. Their profit, what they take home after paying everything, 80% comes from the membership fee, because the membership fee costs nothing to run essentially, right? And they're selling the rest of the store at cost. So think about that again. 190 billion in revenue total. 4 billion comes from memberships, but the memberships make up basically 4 out of the 5 billion in profit. So it goes straight to the bottom line essentially. Just so it's insane, right? That's their business model. And this is where it's like to keep people with that membership, and the churn at Costco is extremely low. I think the renewal rate's like 95%, something crazy, right? And the way they keep that renewal rate high is they have to convince you. And like Jack just said, he went in to buy some steak to walk out with $900 worth of stuff. They have to convince you that membership's worth it. And the way they do it is it's all about value, right? So everything about the store and the warehouse is to communicate this idea. I'm getting such good value for this membership. I would be stupid to not have it, right? So here, and it literally starts. So the founder of Costco's name is Jim Sinegal. He spoke to Jeff Bezos, and this is a very famous interaction because they're both from the Seattle area. Costco's based from Seattle, Amazon's based in Seattle. Bezos was looking at launching Prime, which is also a subscription product. He asked Sinegal about Prime, and Sinegal said that the membership fee is a one-time paying, but it's reinforced the concept of value every single time anything's purchased from Costco. You go inside and you see a TV that's $200 less than competitor. You're like, oh my God, such a good deal. How could I ever not have the membership, right? So I'm going to start rattling off some stuff that I think Jack's going to have a good laugh here because it's very visual how they set it up, right? So again, the membership is the business model. And the psychological edge it does is called the sunk cost fallacy. Once you put money down for a membership, you guys probably experienced this. If you pay for membership, you want to quote unquote get your money's worth now, right?
Yeah. But the whole point is we know all about that, bro.
You know all about it, right? It's like you get people invested, but like once you pay the membership, you should actually stop thinking about it because like the money's gone, right? But it doesn't matter. That's not how the human brain works. So you roll into Costco. What's the very first thing you see, Jack? It's TVs, right?
TVs.
Giant TVs. Okay. Obviously not by mistake. 2 reasons why you see the TVs first. Because they have huge markdowns on TVs, and you'll notice a markdown on a TV more than you will on a piece of fruit, right? So if they're selling a piece of fruit for 90 cents versus Safeway at $1, you're like, oh, it doesn't matter. If they're selling a TV for $200 less than the competitor, you'd be like, oh my God, value. So everything now is about value. So that's the first part. The second part of putting TVs first is this. That's one of the highest ticket items in the store. So everything else in the store is going to look cheap by price anchoring. Right? So
love it.
Genius move. What does a warehouse look like? They have 800 warehouses in the world. Do the warehouses look fancy or do they look like total shit and like where pirates drop stuff off, right? It's like concrete flooring, exposed beams. It looks like a freaking factory. People are driving around with forklifts. And again, all of this is to communicate the idea of we're not wasting money to make this place look nice. It is bare bones, passing everything on to you. Well, I have a question. When you leave Costco, what do you use to pack your groceries in? Is it shopping bags? Or what do you
old
use?
Boxes, yeah.
You use the old boxes. And that's just like you saying, oh my God, they're recycling stuff. Value. Oh, it doesn't end, bro. So there's the next one. There's a concept in retail called stack 'em high, watch 'em fly. Have you heard this? It's a British concept, actually.
Just like literally stack them to the rafters is that what thing they were calling.
Yeah, exactly. Yeah. You stack them to the rafters, and there's an evolutionary part and there's kind of a more kind of retail part. The evolutionary part is when there's a scarcity mindset, right? And like you kind of, if doesn't look like there's a lot, you kind of feel like kind of closed in. Everything's out there. There's abundance. There's like, hey, I'll take one for me, one for you. I'm not stealing from anybody else, right? There's just so much here. I'm just going to take some for myself. And they describe it as, this is very well known. If you ever go to discount stores, what do you see? Things are just stacked. People want to get rid of the inventory, right? So that's the psychology right there. Let me knock off a few more, which are just absolutely hilarious. They have their signature line, Kirkland, which I'm sure Jack's a fan of. Bilal and Jack, you guys fan of Kirkland?
I got some Kirkland jogging bottoms, I think. Socks.
Buddy, all the products, right? Here's the insane thing. They go to the same manufacturers of the brands, and they'll just be like, hey, listen, if you want to stock inventory at Costco, your product that you're going to make for us has to be 1% better than your existing product at a minimum. They're like, we will pick the metric that's on. For the socks, they'll probably be like, we want these socks to be 1% more sweat absorbent, like something like that. And it's just it raises the perception of Kirkland, which, by the way, does a third of Costco's revenue. I want you to think about that. They do 40 to 50 billion a year just on their white label brand. And it's because the white label brand is so good.
I forgot they even do food, but they do food.
They do food.
Kirkland chocolate raisins, boys.
Oh, unreal, right?
Outrageous.
Dude, they probably went to the original. They probably went to Kellogg and been like, yeah, you're going to manufacture this for us and ask me 1% better. I want 1% more raisin in there.
Yeah, probably like 25% better.
And Jack, exactly. And this is what Jack will love. The reason why the manufacturers accept it, distribution. They will take the distribution, right?
Yeah, you know what? I saw there's a deal in that. You guys know Vital Proteins. Have you heard of that company?
No.
Yeah,
they do like collagen.
Yeah. I think I just had it an hour ago, actually.
Yeah, blue and white. It's like a blue and white thing. The flavorless one. And Costco exclusively stocks the chocolate version of that collagen powder. And I think that would be like, it's kind of hard to fathom that would be, it would make sense for them to do that exclusively, but that gives you a sense of the scale of
guaranteed
Costco.
Distribution,
it's a badass product. Yeah.
Yeah, it's guaranteed. So I'll just knock up a couple more. We're all laughing. I think it's funny because everybody, when you hear it, you're like, oh, it makes sense, right? The other thing is, man, if you're a giant warehouse and you have these pallets that just stack items, you're going to have very many fewer SKUs, right? So they only have 3,000 SKUs, pieces of inventory. Walmart has 40,000 SKUs. Wow. So, I mean, when you roll into...
Sorry, say that again, 3,000 versus 40,000.
Yeah, so they have 3,000 SKUs, and then Walmart will have like 30 to 40,000. So 10% of the SKUs. So this is the beauty. It's like when Jack goes in and he sees one vacuum and it's on sale, there's no paradox of choice where there's like, 10 vacuums, I don't want to deal with this. It's like, oh, look, there's one vacuum in the entire Costco store and they marked it down 20%. I might just grab it. It sounds like a great deal. I don't even know if I need it, but that's the beauty of it. It's like you take away the friction of decision making. It's just, there it is, right? And they do this across the items.
Who's doing this online, would you say? Who's the closest to this? Or like, because I'm thinking of like Thrive Market, which is not the same, but I remember speaking to them once upon a time and they said they're like Costco meets Whole Foods or something, like healthy, good quality food with dietary specific stuff. But there's like the membership fee and you're going to get a discount. But is there anyone that's really a true competitor?
It's the Amazon part, because the SKU part is different, right? Because it's like you can have infinite SKU online. But like Amazon... Really, I think Amazon's the best model just in the sense of how they lock you in. And like, if you remember, you spend so much more.
But I think what you just said there about the paradox of choice is like obviously the opposite on Amazon. You get too many choices.
Right. So
and they've tried to account for that with like Amazon's pick or whatever, or like the
Exactly.
number one rated one. But like honestly, if there was something like this online that just took away the decisions for me to make, like, and it was that price,
You know,
I would,
Italic.
yeah, I was going to say Italic for clothes actually. Well, actually now they've gone beyond clothes,
home
actually.
goods and stuff.
They've got home goods too.
When we moved house, we bought a
subscription.
bunch of stuff. Yeah, they do. I think they changed their model recently, but they went directly to the factories of, you know, I think they started with clothes. And they'll say, you know, this place makes Prada wallets, but we're just going to do a black and brown leather wallet by the same manufacturer as Prada, and it's going to be 30 or 40% of the price. They're doing gym equipment, they're doing like shoes, all sorts of stuff. We bought a bunch of stuff from them. I think they actually changed their model now. I don't know if
they just changed it recently. I saw their post.
Opened it up,
Yeah. Great business, though. It seems like great business.
You got to get that sweet recurring revenue, right? Well, this next one, you'll laugh, is they made their shopping carts bigger because visually, if there's empty space, you fill it up. Dude, it's not even the shopping carts, bro. Have you ever rolled out of Costco with the orange pallet? That's when you know you're a boss. You know what I'm talking about?
Yeah. No, what's the orange pallet?
It's like the cart. It's
like
the
cart.
Yeah.
Got it.
It's like a B&Q, like a Home Depot
the huge
thing.
ones.
Gets you to spend more money. The store layout is like anything else. They put dairy and meat in the back, so you have to walk through and see everything. But here, you guys will recognize this. All the discounted stuff that they want to push is in the middle. It's called Action Alley, and like the way Costco's built is like a horseshoe, right? It's a horse track. So you have the stacking shelves on the side, but the middle, when you walk through, you see everything. It's very smart how they do it. You see everything.
Eye level, is it?
Yeah, at eye level.
So that you're more likely to buy it. Is that what?
No,
it is?
just so like it's so you see every. Yeah, exactly, and then so you can start picking at it. They rotate amazing. Goods. They don't have signs. They don't have signs at Costco. It's because they want you to run around like a little chicken to find out where it is. They call the staples, they call them triggers. So, you know, light bulbs, batteries, paper towels, they're always moving them around the store. It's devious, man. So if like you roll in a Costco, it won't be where it was 6 months ago. You have to walk around and find it. And like Jack, you're going to go buy a freaking vacuum for no reason.
That's hilarious. All right. So it's all making sense. You've been
so it's
nicely
all together,
tricked,
right?
Jack. How do you feel?
It's a fair exchange of value, I would say.
There's a word, right? So they're making you think about value. So I'll do the last two, and then we can put a pin on this. They never had express checkout until I think because of COVID, and again, there's a very psychological reason why. You're not walking into Costco. They're not going to let you walk into Costco and buy one jug of milk. You're not going to, they're making those lines long. So you're going to make sure that you spend your time there.
Oh, that's such a good point.
Dude, how
when
smart
I remember
is that,
going,
man?
I would see it and I'm like, oh, we're not coming again next week. Like, let's stock up.
But you do come. Yeah, bro, exactly, son.
Let's go for it. Yeah, that's
Dude,
smart.
how
Okay, I
smart
never
is
thought
that,
about
man?
that. Incredible.
And then this, and here it is, the nail in the coffin. Everyone knows about the $1.50 hot dog. It's been that price for 35 years. There's a famous headline from Business Insider. It goes, Costco's founder once told the company's current CEO, if you raise the price of the fucking hot dog, I will kill you. And there's a reason why. Of course there's a reason. The hot dog and the food is the last thing you see when you leave Costco. So what do you do when you leave? It's seared in your mind, the value of Costco, because you're buying a $1.50 hot dog. It's just
amazing.
So
smart.
Man.
You think IKEA nicked that?
Yeah, I was going to say the meatballs are IKEA, right?
The IKEA had the meatballs, and they also have the $1 hot dog. Dude, exactly. So there it is, man.
That's amazing. I didn't know all of that. That's incredible.
Genius.
Jack, you're a design guy. Anything else? Anything you want to comment on Genius at Costco?
Tell us about the store design.
No, one other thing I would say about design is it looks like they commission like one-off packaging for certain things, right? Because they do them in different scales, different sizes. Like a lot of it is kind of wasteful where they will have like, say if you buy like Starbucks pods or whatever, it'll be in this like presentation pack versus the like thing you would get at a supermarket. They're like one-off design things.
Yeah.
Which I think is part of the novelty, right? It's like almost like supermarket sweep or some like, especially if you grew up in the UK, like I did. Like this thing is so novelty as it is, like the shop itself, and then every single thing.
Costco's huge, you mean?
Right, and then every single thing you encounter in there is like comically large as well. It's like
like bro, the peanut butter is the size of this.
the peanut butter and the cans of tuna this big. Who is buying that?
It's mental.
Subway. Subway is buying that.
Yeah, I wonder what the split is among like commercial food businesses, because obviously,
right. They're going in there. Yeah.
They're definitely going in there, but then I guess you have distributors, so it's a weird. People have 6 kids or whatever. They're probably going and getting a big ass can of tuna.
72 croissants, mate.
72 croissants. Yeah, like the quantities are bigger, and the actual individual items are bigger as well. Like the muffins in there, you choke a donkey with one of those muffins.
or as Bilal said, the 75 croissants. Wait,
That's all I remember going as a kid. And I would buy Haribo, like the sweets, and sell them at school, obviously, because I was
oh my
that
goodness.
kid.
And on eBay.
No, not the sweets on eBay, but it was you could buy it in wholesale because we couldn't leave the school, so you got to lock them in while you can, But Trung, what are you going to say?
I had one last thought was just from a very corporate standpoint. So that's all the psychological hacks that I walk through that they get like us, the customer. But like, imagine you're the CFO and CEO at Costco. You're thinking about what to open up the next store. They're actually their frame of thinking is real estate. So the way they look at it is this: it costs about $100 million to open a new warehouse, and each warehouse makes about $4 million a year, and that $4 million a year grows at about 2 to 3% a year. That's kind of like the rate they're at right now. So like literally everything we talked about is very micro, but if you're at the top of Costco, this is how you look at expansion. You're like, it's basically like a bond. You're like, I'm putting $100 million down. I'm gonna get 4% a year for how many X years. And then you factor in how much will this real estate appreciate. It's kind of like how McDonald's like is a real estate company, right? Like we can walk through that another time, but like, so Costco in a lot of ways it's a fucking real estate company. They know their model works. They know they plunk $100 million that they tell the people in that city and they pick the right city. They're going to make $4 million a year on that property. It's a freaking bond. That's such an interesting way to think about it. And
that's interesting because if you compare that to like a normal real estate, like purchase, if that was a real estate purchase, I don't know the numbers, but I'm assuming the real estate would only yield 2 million and this would be 4 million or something like that.
And it's locked in. They know what they're going to make on that. So like that gives them confidence to go out and spend their cash on buying that real estate. It's fucking fascinating, man.
Now all they need to do is get Sailor
too, right?
Oh yeah, gas is the other big thing.
Oh yeah.
Sailor, you're right.
Yeah. I was gonna say now they just need to listen to Sailor and just take 30% of their treasury and put it into Bitcoin, and then they can increase their margins finally after that ridiculous run they've had. No, that was great. Thanks, Trung, for breaking that down, mate. That's really interesting. I didn't know any of that stuff. Pretty cool. All right, boys, should we call it here? I know
I'm good, man.
This was really good. This was a good
fantastic
chat. I know we're normally really heavy on the Web3 stuff, but we still covered off on ENS. But these two, Elon and Costco, was nice to have in there as well. All right, boys. Well, that was fun. Jack, anything else before we cut out?
No.
All right. Perfect. Well, yeah, thanks again for listening to the show. Make sure you're subscribed everywhere on Apple Podcasts, Spotify, YouTube. Join our Telegram group. And as always, this is not investment advice. And we will see you next week. Cheers.
Awesome. Thanks, guys.